Thanks for joining David, Kevin, and myself for the market update for the month of April. Markets were a little choppy, just like the weather. The S&P 500 was off 3.97%. The S&P TSX index was off 2.12%, and the EAFE region was also off just over 3%. Again, this is normal market. We started with 3 great months. Now we have a choppy month. And we sort of expect that throughout the year, maybe 8 good months, 4 off months. But overall, we're still expecting 2024 to be a real good year for all of us. I'm going to pass it over to David and Kevin, and they're going to give a little more detail of what happened down in the US and Canada. Thanks. Take care.
As Harry mentioned, the US stock market was off a little bit in April. Largely, that was due to the fact that inflation continues to be quite sticky, as well as the fact that US GDP came in a little bit lower than was originally forecasted for the first quarter. US GDP came in at about 3%, which is still very much positive growth, but it's not quite as robust as we had been seeing in the 2 previous quarters. So markets digested that news and traded down a little bit. The other issue that we were seeing in April was that US inflation continues to prove quite sticky. Economists had forecasted that inflation would come in at about 3.3% for the month of April, and it ended up coming in at 3.4%. So again, not really a big deal. We look at it and say, okay, it was 10 basis points higher. But for economists, that's a big enough signal that inflation continues to prove to be quite sticky. And the fact that everyone was expecting interest rates to start maybe coming down in short order is clearly off the table, at least for now. In fact, many investors were probably fearful in April that we might actually have a rate hike increase from the Fed at the next announcement. Well, fast forward to May 1st today, and the Fed announced that they would not be hiking rates anytime in the near future, but that they also wouldn't be cutting rates anytime soon unless they saw sustained improvement on the fight against inflation. They want to see inflation continue to probably crack that 3% threshold and get into the 2s before they're willing to cut interest rates. So that's what was causing a lot of the volatility in April. The reassuring thing for us, though, in the mid to long term is that many corporations, especially in the United States, continue to crank out awesome profits. So while we expect there'll continue to be a little bit of volatility in the short term because of markets digesting what is happening with inflation and the path for interest rates, companies are still making quite a bit of money, which we can take some solace from.
Just like in the US, the Canadian market was also off in the month of April. We're seeing our inflation stay higher than we would like it to be. In the last month, it was predominantly being held up by gasoline prices and the housing market. And the sticky inflation is cause for concern as we lead into our Bank of Canada rate announcement on June the 5th, that the market may think, like, what happens if they raise interest rates? It is unlikely that they raise interest rates. We are anticipating that they'll hold them, just like in the US. And just like David mentioned, some short-term market volatility that crept up in the US as they led into that announcement is likely going to be the same up in Canada. But if we can look past the short-term volatility that comes from these types of short-term situations, there are still lots of good, strong Canadian companies that remain extremely profitable, and that if you hold these companies in long-term investments, we'll continue to see positive growth. Now, our 2 economies continue to remain strong, and that can be viewed both positively and negatively. We all want our economies to be strong, but it's this strength that is causing inflation to be stickier than we'd like. And it may take a cooling of our economies a little bit to help unstick inflation and get it to a level that we're happier with. In Canada, we also saw the release of the budget for 2024 in April. Some quick highlights. The capital gains inclusion rate was increased from 50% to 66%. There was edits to the homebuyers plan, which now allows qualified homebuyers to borrow $60,000 from their RSP compared to the $35,000 previously. There are a lot of other topics that came up, more than we could go over in this market update. And so we will be dedicating our educational video solely to that topic later this month. So please stay tuned.
As always, if you have any questions about the markets or your portfolio, please don't hesitate to get in touch with Harry, myself, or Kevin.
Take care.